What if I told you a stock market could crash 12% in one day, then rocket back 10% the very next day? This is Kenya News Update today. Coming up, you'll discover the wild 48 hours in South Korea that left traders breathless, why it has nothing to do with fundamentals, and what a single U.S. government statement did to change everything. The scene was Seoul, South Korea's vibrant capital. On Wednesday, the benchmark Kospi index plunged a catastrophic 12%. It was the worst single-day decline in recent memory. A wave of panic selling swept the market, driven by retail investors facing margin calls. But here's the twist. Just 24 hours later, that same market staged one of the most dramatic rebounds in financial history. The Kospi didn't just recover, it soared. At one point, it was up a staggering 12%. It ultimately closed 9.6% higher, clocking its best single-day performance since the global financial crisis of 2008. That's not a recovery, that's a rocket launch. And the small-cap Kosdaq index did even better, closing up a mind-blowing 14.1%. The rally was so sharp, so violent, that the Korea Exchange had to halt trading briefly on both indexes. Meet Daniel Yu, a global market strategist at Yuanta Securities. He cuts through the noise with a shocking explanation. He says this historic rebound has nothing to do with company fundamentals or economic data. Nothing at all. It was purely technical. A wave of leveraged selling had triggered heavy losses, but once those positions were unwound, the market snapped back like a rubber band. But here's what nobody's talking about. The initial crash wasn't just about margin calls. Raisa Rasid, a strategist at JP Morgan Asset Management, points to a much bigger global fear. The sell-off was driven by upside risk around oil prices stemming from evolving geopolitical developments. South Korea is a major crude oil importer. Uncertainty about how high oil prices could rise threatened to wreck its current account balance and fuel inflation. So the entire market was held hostage by the price of a barrel of oil. And then, something shocking happened 7,000 miles away. U.S. Treasury Secretary Scott Bessent stepped up. On Wednesday, he announced that Washington, under the Trump administration, would roll out a series of measures aimed at stabilizing oil shipments through the Persian Gulf. The signal was clear. The U.S. government was prepared to step in as tensions threatened one of the world's most critical energy corridors. Almost immediately, risk sentiment improved. Oil prices began to stabilize. And Korean equities, led by giants like Samsung Electronics and SK Hynix, exploded upward. These two memory chip titans alone constitute almost 50% of the entire Kospi index. Their surge of over 10 and 11% respectively single-handedly powered the historic rally. JP Morgan's Rasid adds another crucial layer. Demand-supply dynamics in the memory chip space are likely to remain tight through this year and possibly the next. So the long-term structural drivers for these tech giants and for Korean equities remain firmly intact. This wasn't a fluke. It was a perfect storm of panic, policy, and pent-up demand. The implications are massive for global investors. This episode reveals how fragile modern markets are, swayed not just by earnings, but by geopolitical whispers and government statements from across the ocean. It shows the incredible concentration of power in a handful of tech stocks. And it presents a huge controversy. Some say this is just healthy volatility and a testament to market resilience. Others see a dangerously leveraged system where 12% swings can happen on a whim, disconnected from the real economy. The big, unanswered question is this. If a single statement from a U.S. official can trigger a 10% rally in Seoul, what does that say about the true independence of global markets? We just witnessed a market lose 12% of its value and gain 10% back, all in 48 hours. Do you think this kind of volatility is a sign of a healthy market or a ticking time bomb? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking global financial news.